everybody. It's Tuesday, April 2nd. And this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets had May corn down 3/4 at 434 3/4. May soybeans were up 2 at 1187 3/4. And May Chicago wheat was down 3 at 554. Yesterday, after the close, we had crop progress and conditions, our first one of the year. Corn came back 2% planted versus 1% for the 5-year average, so pretty much in line there. They did not release a bean progress number this week. Potentially next week, I think, is when they'll release their first. And spring wheat came back 1% planted. 5-year average is 1% as well. Looking at crop conditions, one thing to note, the winter wheat crop is, by all accounts, exceptionally well rated, 56% good to excellent, which is the highest rating for the winter wheat crop since 2019. Last year, to give you just a little bit of info, last year's winter wheat rating at this time was 28% good to excellent. So significantly better there. I guess we'll kick it off, Ben, in the East this morning. Thoughts on the market, a little bit of data yesterday after the close, and then we'll kick it around the room. So good morning.
Yeah, I think yesterday, some back and fill action following the sharp run up on Thursday's planning intentions report. Not uncommon to see that happen in the auction. I think there's a lot of things here for corn where it's going to have to make some decisions. We flirted with the 50-day a number of times. We're back below the 20-day this morning. The market's pure and trying to find price. We talked before we got on this morning that the dollars showed a lot of strength. Equities are having a rough start to the year. So I think that you got to be patient here and look at the seasonals and have a plan in place moving forward.
Yeah, it's good. Dustin, we noticed yesterday another strong week for, corn shipments. So we continue to see, solid data, certainly in the corn complex. Thoughts on that?
Yeah, we've had a pretty decent export pace to Mexico. So I think that's, one area that's not going to draw us back. We also had less corn stocks than expected on that report on Thursday. So 80 to 100 million bushels less than they were estimating. Still more than last year, but, that's a pretty good drawdown in addition to the lower acres. So one thing I would note on that is despite good shipments, despite good exports, we are seeing a break in the spreads. We had new lows yesterday. So, an example of that would be July 24 corn to Dec 24 corn settled at 25.5. We're trading 25.25 right now. So 25.5, that's about 50% of full carry, just above that. And that's that's definitely a wider number than you would see in years past because of the change in, storage rates starting December of 19. This is the first year that we've really had a carry out sizable enough to start to test this. And you combo that with higher interest rates than we've had those early years as well. And we're seeing spreads that I think surprise people how wide they've been getting. And it's really not that wide for a percentage of full carry when we're talking north of a 2-1 carry out. So why is that happening? Why are the spreads breaking even though we found less supply on hand? It could be that we met this latest rally with another round of grower selling, catch-up selling. That was a pretty decent rally off of the low, and we were just going into planting season here. We don't think it was fun selling. We'll see on Friday, what the latest COT report does through today. But if we had to guess, this is probably met with increased farmer selling on this latest rally post the report.
Yeah, and I would add to that great point about the spreads. The market, especially if you watch NOV-24, NOV-25, that spread is lost almost a dime in 3 or 4 trading sessions, and it's trading in an inverse. I think that's telling a little bit of a story as far as beans go as well.
Yeah. Yeah, I think, flat price, it's interesting when you've got crude oil, performing pretty well recently. A lot of uncertainty, obviously, overseas causing that. But, higher energy prices, higher metal prices, higher Bitcoin, a lot of dollar denominated assets have been showing really, really strong signs recently. And it could be the fact that we've lost 20% of the dollar's purchasing power in the last 4 years. That could be why, right? So we go back to that question of baseline corn price. Sometimes, measuring flat price for corn is not the best metric for determining excess supply or what market participants are doing. A lot of times we like to look at things like the spread and how the spread's interacting, because when the dollar is falling, it's rising tide raises all ships. A lot of times we can actually see spread widening when prices remain flat to supportive. So I think that you are met with a little bit more of a cleanup of grower selling. And I wouldn't be surprised once we get through planting if we're not at our typical levels of percent sold growers in, versus commercials going into, your typical spring seasonality timeframe. That's why I think things could get a little bit more interesting, with our acres being down 5-6 million from last year in these principal row crops. Is like if you get a cleanup of positioning where you don't have this whole lag of lack of forward sellers from growers. If that's all been caught up to where there's not a need to sell, a necessity to start selling, then you might be able to find some a better situation where the market's finding true price discovery, not just something that is out of a forced sale going into loan renewal. It could actually be a better matchup of buyers and sellers.
Yeah. I would say, and this is purely my opinion, but when I watch the way the beans are trading, I feel like I'm watching corn from last year a little bit. It's trying to slowly transition into a market that right now should look like it's going to be perceived abundance in the next year. Granted, we have a long way to go as far as making that crop, but I think you go back to we've discussed before that the turns can be really hard in these markets. And we've been blessed with a great soybean market for going on 3 years now. So I think that's one that's kind of in a slow motion towards what we saw in corn.
It was interesting though, because NOV-NOV is still 20 over at the end of the day. And if we're talking about forward demand, NOV-25 probably has a lot better domestic demand than NOV-24 does.
Yep.
So it could be order flow. I'd be curious to see what that thing does here. I mean, if like there's a lot of things pointing to strong beans right now, like strong ratio. Beans are 2.5 times the price of corn, which is definitely on the high side of things going into the planting season. So if that stays like this going right through middle end of the planting window, I mean, we're talking maybe those acres that everyone thinks are coming back. I think they'd be more probable to come back to beans on some smaller scale than they would corn, because of the price incentives right now.
The thing about NOV-NOV though, Dustin, not to cut you off, is that's such a speculative, that's a widowmaker. That's like being long futures. I mean, it's such a popular thing because it lowers your margin requirements versus buying futures. So a lot of spec guys will go buy NOV-NOV and just trade it. So if you have a big flat price move, like they'll move that 50% at least delta. So I think a lot of guys look at it as, hey, I could buy a call and at the money call for what, 50 some cents, or I could go buy NOV-NOV and it cost me way less money to get leverage. So I think that's a little different. DCS is such a bigger underlying contract. I think it acts, but we see periods of that where DCS trades like futures because you get 2 different crop years, a bunch of different reasons. So I think NOV-NOV is a really tough one to, like, in my opinion, place fundamentals to until you hit that, July, August forward time frame.
Yeah.
So
I don't disagree, but there's 2 metrics there that are showing support for beans over corn. High ratio and spreads are a lot narrower for beans in general than they are for corn as a percentage of full carry. Mm-hmm. So, the market is coming out of what 7%, 7.5% stocks to use ratio, and We just had a crush number that was very strong yesterday. Domestic crush is still strong.
Well, I think beans are owned by the commercial too, more than corn, right? You saw huge on-farm corn stocks, which is I mean, that's what we've been talking about. I think that's, to your point, why you're seeing, once the commercial owns it, you can use it a lot easier than trying to pry it out of farmer's hands. So,
yes,
I think that's also a big reason.
I agree with all that. I guess my underlying point of this is like, maybe this is one area where we might disagree with the market a little bit is, that elevated ratio, right? And the perceived tightness of beans still seems to be there. And when we're talking about a grower that's got half of his crop in corn, half in beans, where are the areas of risk to tackle first? Maybe that is on the bean side, especially if margins are better, is go focus on starting your more aggressive pattern of hedging there in various ways, and that's something we've talked about with our customer base a lot, right? With volatility difference and stuff, how to do that, but just reinforcing that idea.
Yeah, and I agree. And I think when you look at the market structure, it's makes sense from the corn spreads versus bean spreads, because you're punishing the ones that are holding a long corn position in this interest rate environment. You were talking about, spreads, and, we can get in this later, but like copper is a good example. It's been on a 20+% rally, and spreads are making, I think, multi-year lows, same kind of thing. So they went from an inverse to a carry. I think I read it might be at almost all-time, wide spreads. So just to your point, this interest rate environment, is affecting multiple commodities, even though their flat price rallies are happening, because there's underlying support for whatever reason out forward.
Well, let's break this down to a more micro example of like forward purchasing inputs, this summer or fall versus waiting till the spring. When you're having to borrow money at prevailing rates, 8% operating notes, like all of a sudden there's definitely a calculation that needs to be made of like, what's the savings you're going to get by giving up that money now versus, not spending that interest for the next 6 months. Like there needs to be a carry built into the market to some degree for a lot of hard assets because the cost of money is real right now. It's not what we've grown accustomed to in the last 12 years of zero interest rate policy. We're in a different world now. So
that's good stuff, guys. We got a couple minutes here coming into the open, and wanted to talk about it was interesting livestock markets there towards the close yesterday. It was really unsettling that it was April Fool's and we were getting reports out of different areas and you didn't know what to take serious, but it has been identified that a person in Texas was diagnosed with the bird flu. In fact, I believe I read yesterday it was like the second person affected overall within the United States in general. Ryland, we did see a sharp break, in cattle. It was a risk off trade, but what's your overall thoughts now that we've digested a little bit of this information?
Yeah, I mean, it's anybody's guess how much fear is going to be surrounding this and just how exactly the industry is going to, there's nothing they can do on the human side of things. All they can really do is monitor the health of the animals. And I think everybody's all over this. You got, the USDA, you got APHIS, everybody's trying to figure out what is going on here. It is only the second case of H5N1 detected in humans, coming off, transmitted from an animal. At least that's still the likely scenario at this point. We still don't know if that's 100% a hard fact or not, but it was definitely risk off yesterday. Open interest barely changed. Cattle open interest was up 123, and feeders were up 309. So you didn't see a massive changing of positions. It seemed like, I think most people want to sit back and get more of the facts first before making too rash of a decision here. So, April fell back to the 100-day moving average, which, would typically act as support right now. There really hasn't been much cash trade to fall back on. So, we'll see. It seems like that was a bit of a knee-jerk response to the futures. I don't know exactly how the packing industry is going to handle it, but it's a situation to be monitored. And anybody that's scared that there's going to be plant closures or something, a reaction that's going to be, more extreme, that is still a big concern. So definitely seeing a little bit of follow through here this morning. and we'll just see kind of where the dust settles. I think those knee-jerk responses, you just kind of got to wait and get all the facts first to make any kind of rash decisions. Nothing too emotional. I mean, we're at already really historically high price, so we're going to see these things. It's kind of reminiscent of last September, except there's a little bit more, there's just a different story. So, and this is one that I don't know if it directly affects the beef supply, but we'll see. I think it's just at this point, it's a wait and see, continue to monitor the situation, but we've traded through some support levels here that are pretty important. So I wouldn't be surprised to see anybody that's been waiting to buy this thing, maybe step in and try their luck. But yeah, I mean, it just goes to show, and we've been emphasizing this a lot, is that we're at these high prices. Having enough protection to weather these kind of breaks and to not panic when the market drops like this is really important. So I just want to part with that kind of advice.
Yeah, and Ryland, this kind of goes to what Dustin was talking about a couple of days ago about just black swan geopolitical risks. This
Right.
is one small report. I mean, really not that much on paper, but had a massive, move. So
right. It was an emotional response, and those, as my dad used to say, it's the random dispassionate movement of capital. You just don't know when somebody says, hey, get me out. You don't know when that's going to happen. It could happen tomorrow. Somebody carrying a big position needs to liquidate. Somebody goes out of business. You never know exactly when it's going to strike. So, you just kind of want to be really prepared in this environment. There's no question about it. I mean, in a situation like this, there's just so many questions, you just kind of want to wait and I think make the best informed decision you possibly can.
That's good stuff, Ryland. And as you mentioned, we'll continue to monitor this. Any new news that comes out in that front, we'll certainly be passing along. Just came into the open here. We got May corn unchanged at 435.5. May soybeans are up 5 at 11.91, and May Chicago wheat is up 3.5 at 560.5. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Good discussion there today, guys. Appreciate all the feedback, and we look forward to talking to everybody tomorrow. Have a great day.
You too.
Thanks, Dan.